Recording. All right. Good afternoon. Welcome to this monthly masterclass NP Financials, the prop form that care. So actually, this is March masterclass today on 3rd of March 2024. Thank you all for taking time out from your busy schedule and attending to this session. This will be more of interactive in nature as always. We'll be here. You will be. Good afternoon, Tyron. How are you? Thanks for joining. So we'll be talking less and listening to you more today. After I am covering whatever points I have to cover, with answering all your questions, then I request Ben to share his experience, how most of his trades are running in profit, how he's going about it, his trade management, and how he's going about his position size calculation, which is extremely important. And after that, our senior trader Marty will lead us through his approach in a very different way, known as Elliott wave, in the last 30 minutes or so. Ben is yet to join because they were having the family, actually, Ben and Kerry. They had some COVID issue, but I spoke to Ben and he will be letting us know if any the problem. But as of now, he is ready to deliver his understanding or observations, or he will share his thought process in the market. So, all right, we'll start with your questions from first from Vijeta. We got some questions. Could you please help with clarifying the following? What are the conditions for the successful crack and snapback, such as it occurs at support and resistance, any candlestick pattern to confirm crack and snapback? So there are three questions. First of all, successful crack and snapback, and Ben. Good afternoon, Ben. How are you? I was just talking about you. We just started in 1 minute. I was just talking that after I share my last month experience with the market, you'll be taking us through for 30 odd minutes, and then Marty, and he'll be sharing your how you're approaching the market, how most of your trades are running in profit, and why they are running in profit, how you're managing your risk, and how you're most important, how you're calculating your trade size. Oh, Kerry is here. Hey, good afternoon, Kerry. How are you? Good to see you. I trust you are going well and recovered. Yeah, Kerry.
Hello,
Fantastic.
I'm also here. I'm also here.
I told you, Tyron. How are you? I told you. Tyron is a good friend of our Prime Minister, Anthony Albanese, whose election. Most of the countries, as you probably know, are going for their prime ministership or presidential elections this year. Surprisingly, all of them, mostly actually. So, United States is going, our own Australia is going, India is going, even Russia, Pakistan, Bangladesh, Philippines, Germany, United Europe actually, for their whatever parliamentary committee they have, and then United Kingdom. So almost all the big nations are going for election this year. Which will be extremely important to know from the perspective of the market, especially the S&P 500, which will be discussing Dow Jones, dollar index, gold, and of course Forex indices, and probably shares and commodities as well. So this is a big year. So we'll all be, especially because Trump is probably going to be their candidate. And if Trump is fighting well and he is winning for the second time after 2016, we'll see we'll have an interesting time in the market, because our experience said when Trump was elected in 2016 November, the market moved like crazy. All right, so we'll discuss that. But first, your question. So Vijayata's question: what are the conditions for the successful crack and snapback? All right, did you have any currency pair in mind, Vijayata, when you asked this question? I can go to that currency pair if you like.
Any currency pair would do.
Any currency pairs. Very good, very good, very good. All right. So let's see one crack and snapback promise support. Yeah. Which one is the possible best one? Not best, whichever actually now, as we speak, has happened in recent past. Both of them actually happened. All right. So this is a good one. Euro USD in front of us, and we are taking the first questions of this monthly masterclass of NP Financials. That is what is the criteria to become a successful crack and snapback. All right. The first success, although no one knows the right hand side, we also included in that. We don't know the right hand side of the chart, so we always hide. Recently, those of you who are doing the practice task, starting the end of day and end of 2 days practice like Kim is doing, and Dilkishan would be doing, and eventually Tyrone, all of the newcomers would be doing. So there was a question from Kim: how do I move the markets? Because we have to see six charts, one for the bar chart like this, we have a line chart, and the 2 day, 3 day, weekly, and monthly momentum charts. So, fortunately or unfortunately, this software, this is one of the best, itfinance.com real time. This is one of the best because we have used all of them, including eSignal and TradingView and all those. This is the I think one of the top class, including Warden. Warden was also a good one. Any which way, so so he was asking me, should I move chart by one bar at a time, like this one, or should I get biased by seeing? No, he did not say that. But if you do a back testing, if you have the right hand side open, that is not a good thing, because the right hand side is never ever known to anyone. So always, whenever you're doing any simulation or back testing, whether it is, I always prefer to do it manually. Maybe you prefer to do it in an automatic way, but if your software is doing for us the back testing, then what are we learning from that? We are not learning anything. If the software is doing for us, if the artificial intelligence is doing for us, what are we learning? We are learning nothing. We are learning zero. So that is what we prefer always to do ourselves, or do it with your hand, with your brain, with your mind. All right. So to answer your question, we'll start from here. We all know that we have lines from quarterly and yearly, and this is a line from quarterly, this second one from the quarterly, and this is from yearly. As you can see, we have drawn these lines once in a year, once in a quarter, for 8 currency pairs. That takes only 1 minute. Doesn't take more than that to draw lines, support and resistance line from the swing high and swing low on the yearly, with inferior time set, because otherwise they will not come and sit on the quarterly and monthly as in front of you, like this one. This is coming from the yearly and showing us on a daily chart. Yeah, so showing us from this yearly, it has traveled all the way to show us in a daily. So this way we have this some day, and which was on 28th of December. We are taking the first question of Vijayata. 28th of December. Okay, before that, let me go to this one. So forget about the cross. I can delete that cross. Okay, on this date, on 26th of December, we are seeing the market merrily going up and up. This is impulsive corrective. Marty will touch on that. Impulsive corrective, so on and so forth. What we can see on this bar, there is a possibility of either a rule of four or break one, break two, our proprietary strategies, which we only divulge to the our paid clients. Or it can happen a rule of four, it can happen, it can break one, cannot break two, or it can also happen a crack and snapback. So anyone would tell me that what should happen for a rule of four, that this fellow will, with high probability, will come down. Anyone? Please unmute your mic and try to speak.
The next bar must take out the low.
Very good. Excellent. Fantastic, Tyron. Very well. Excellent. Because this has. Okay. Tyron said his viewpoint. Anyone wants to support or contradict or add to what Tyron said? Is this a bar for rule of 4? Yes, no. If no, why not? If yes, why?
No, well, it's
Sir,
a bullish bar, so wait for a touch close below, then the low taken out, whereas the close on that bar is above.
Yeah. Ben is absolutely correct. Yes, Girija.
so I was saying yes for that.
What Ben said, you said yes to Ben, correct?
Yes, because like for me, it is near the like resistance,
Yeah.
and yeah, it is touched as well. It is low taken out, so that is
If the low taken out of and the close below, what Ben said is absolutely 100% correct.
yes,
It has to close below. But Tyron, see, this close is above the line. Yeah, Tyron,
yes,
you agree? Girija, you agree?
yes, I am.
It has to close below and then low taken out. All right. Just by touching a line, nothing happens. Just by touching a line, nothing happens. As this fellow also touched this line, nothing happened. But this fellow is touching this line, but it has to be a bearish bar and low taken out and close below. What Ben said, 100% correct. So let's see what happened. We are expecting a bar to close below. It did not. All right. So now we are seeing this fellow, and this fellow is such a context. This fellow is showing up because market always unfolds bar by bar. That is our strength at NP Financials. We are extremely strong for last 13 years in analyzing bar by bar when the right hand side is not known. So at this point, what our trained eyes is probably telling us that it has crossed one resistance. It is trying to cross the second one, and it is already showing us a setup for a double top and a possible crack and snap back if that next bar, because this fellow, this bar on the 27th of December has crossed and closed above, and now the next bar has to close below, because then only this fellow this resistance, we quarterly resistance will be respected marked by the market participants. So let's see what happened. Yeah, it exactly did the same thing as our trained eyes told us one day before. That is the beauty of training our eyes through back testing, through simulation, and through practice task. So when we saw this 111, such an interesting number, 111 00 or 11111 all one or 11, yeah, I got it. 51 1.1111, I love it. So anything like this, like 6666, whatever it is, devil's number, or 11111, I don't know much of English, so I don't know what is this number known as. But anyway, which way we saw 5 ones, but anyway, 111 is a round number, so there is a possibility that market participants will respect that along with the resistance, and that's exactly what happened here. So successful, to answer your question, Vijay, for to be a successful crack and snapback, it has to appear at a support and resistance. You already have answered the most important context of the crack and snapback. It must appear at a support or resistance. The first thing you have said, nailed it, absolutely correct. So it has to appear at a resistance. There was also a resistance, but this fellow did not touch. This fellow did not close, as Ben said, but this fellow did close above and immediately snap back. So this fellow cracked the resistance, and then this fellow means on the bar on 28 December. Fellow means market participants. We can call bar as a fellow because it's a composite traders and investors and mutual fund managers. So all the human beings. Some are robots also, but the robots are also programmed by human beings. So on the bar, which is 28th of December, it cracked it snapped back. So resistance, support and resistance is extremely important. For going down, it has to be a resistance, and for going up, it has to appear at a support. It must appear at a support, like this fellow. This is again a quarterly support. This is again a quarterly. If you are observing and you are training well, if you're observing well and training well, your eyes through practice tasks and through NP Financial's self-assessment task, what you can see, the very similarity between this fellow and that fellow. Having said that, I'll wait for your answers. What are the similarities my eyes saw here and saw here? Please, one by one. Exact similarities. Anyone?
It happened at quarterly levels.
Yeah, it happened at quarterly level. Absolutely correct. Next. Yeah, Danuka, keep going. This fellow also happened at quarterly level, and the next one on not only one but two, Danuka.
Yeah.
So they both the first bar crossed the first support, and the second bar went down the bearish bar and touched the second support. So
Yeah.
it's double bottom.
Absolutely. The second one is double bottom here. So rightly said by Danuka and Vijayta, and so rightly happened. Market always repeats itself in the form of our double bottom and double top and other reversal patterns. So this one is a quarterly support. This is a quarterly support, and that was a quarterly resistance, and that was a quarterly resistance. Wonderful. So both had a quarterly resistance here, and this fellow had a support. This made a double bottom, as Vijayta said, and this made a double top, as I'm saying now. And Vijayta said this fellow did a crack and snap back, and also this fellow did a crack and snap back. So you have already answered your question. Yes, it must appear at a resistance. And then candlestick pattern is obviously, because as we always say, it is impossible for the market to turn without our turning point. Almost very, very, very high percentage of the time, market without NP Financial's way of turning point, it will not turn. Yeah, this we have been saying for last 13 years with our experience. Yeah, so this is a turning point here because this close was above this. Now this turning point will happen if the bar future bar next bar or next bar is closing below this point. It's already happened. Yeah, so this is a turning point there, that is a turning point there. So that, and having said that, not only the turning point but also for the newcomers who are not yet there, for the newcomers, candlesticks. This is a piercing, that is almost a morning star, but I think it would be engulfing, and this is there's a dark cloud cover. So yes, candlestick should be there. Candlestick will be there. Yeah, I think will be there. When I say will, it does not mean 100%. Because the English word will actually says 100%, but anyway, trading, nothing is 100%. But I should say shall be there. Candlestick shall be there, or should be there, and then resistance, candlestick, and one thing you can add here. You have already answered your question, Vijayta. Is a pattern. Yeah, is a pattern. Like this is a double top, so this is a double bottom. So pattern. So what are the probability we are stacking in our favor, because there is a very thin line with the difference between gambling and trading. Very thin line. In gambling, the probabilities or the odds are always in favor of the house. Whatever you do, they will trick the machine. They will reprogram the machine or whatever they are using, so that most of the time the odds are in favor of the house, and they play all the games. So consistency, these are the two things. And trading, there is a possibility, if we are training our eyes through practice task and self-assessment task and demo trading, there is a very high probability that that we can stack the probability in our favor. So that is what we are doing here. What are the probabilities we are stacking one after the other? We saw a double top, number one. We saw a crack and snap back, number two. We saw a dark cloud cover, number three. What else we can do? We can probably draw a crack, and we can, from here to here, a Fibonacci to see 127.6. If I'm not wrong, I'll be very close. Let us prove that. Yeah, dot. All right. Well, I love it. 127.2, another few. So what I'm trying to show you is we are trying to we are trying to stack the probabilities in our favor. So there are 4 probabilities in our favor in front of you, as I said. And the question to you, Vijayata, did I answer your question, number 1? And number 2, what are the 4 probabilities we are stacking in favor of us so that we expect price to go down? Vijayata.
Okay. So, yes, you answered my question, and the patterns you mentioned is closing on support. It's has to be on support or resistance.
Yeah.
So double top here
Yep.
and resistance here,
Yeah.
and
2, 1, 2, you said out of 4. Yeah. Going good.
turning point,
Yeah. Good, good, good. Very good. Very good. 2 more.
dark cloud.
Dark cloud go, very good, very good. Candlestick reversal, yeah, fantastic, brilliant. You said all of them. Wow. So you have photographic memory. Good thing. So, all right. Any question on Vijayata? You can ask her, or any question other than that, you can ask me. All right. Any question on this one? And Fibonacci, you forgot, Vijayata.
Yes, Fibonacci. Yes.
Yeah. So what are we trying to do? We are trying to we are trying to stack the probabilities in our favor. So there are 5 stacking here, 5 stacking here. So there is a very high probability that it will go down, and rest is history. All right. Next, any question on this one? Until I go to the next question, any question on this one?
So Fibonacci levels like extension retracement. What do you say? Can you put
Fibonacci
some-
level like extension is what? Sorry, Nikhil.
I mean to say the Fibonacci extensions. What is the ideal like 127.20 here you have used?
No, there is no ideal. There is no. Oh, that's a good question. But there is no ideal Fibonacci numbers. They are fixed.
Okay.
Each one
Okay.
of them, if you go to our modules and units on Fibonacci, each one
Okay.
of them are fixed. And they,
Mhm.
if you have already forgotten, please write it down. 127.2,
Okay.
161.8,
Right.
261.8,
Okay.
333,
Right.
423.6.
Right, sir.
So there is no choice left to us by Leonardo Pisano, who was a
Yes. Yes.
Italian
Got it.
mathematician. His nickname was Fibonacci. He for my word. Actually, not marketed. But anyway, I'll continue with my word. He marketed whatever was already there in Hindu Arabic number system.
Right, sir. Right.
And
Got it.
they are
Thank you.
here in module 3, unit 2. If you go to understanding this fellow, I was talking Leonardo Pisano, Hindu Arabic number system, blah, 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 blah. And then if you go down to the retracements level, these are the retracements levels in front of you. Did I answer your question, Nikhil?
Perfect, sir. Thank you. Answer.
Any other question on this? Good question, Nikhil. Any other question on this one? If not, then I'll go to the next question of Vijayata. So he's asking, was it possible Kraken snapback for dollar index in daily time frame on 28? I like these questions. I actually like these questions. So whosoever is asking, Michelle Fernandez. Good day, Michelle. We have started at 3 o'clock. But anyway, if you can let us, Michelle Fernandez, we are I think you have joined it for the first time, isn't it, Missile? All right. So we have taken the first question of Vijayata. We are answering the second question for dollar index. I always love this question, which is asked on the present time. I love it. Present time, because in the hindsight we can say anything and everything, but what is happening now, that is the strength of NP Financials. What is happening now, we should see on that perspective. So she is asking to verify her understanding of dollar index time frame on the 28th of February, whether it is a crack and snapback. Good question, Vijayata. Let me go through dollar index, for which the ticker is DX, and in IT Finance real time they call it US dollar basket. Most of the ticker for the dollar basket is actually US dollar, USD OLLAR. if my spelling is correct. Anyway, all right. So this is the 28th of February. She is asking whether there is a cracker snapback. All right. Very good, Vijayata. Extremely good. All right. Before I answer, anyone of you would love to answer these questions in front of you? She's asking about this bar. 28, she's saying. So 28 is this one. Oh, same scenario. Wow. Because market will always ask us a question. That is why we say, please ask question. Do not suffer in silence. So who would choose this one as her question? Who would choose this one and why as her question? Who would not choose this one as per her question? Who would like to take this challenge to answer the question of this one? Anyone? I know many of you can do that. Okay, first let's go to the 28. All right, go.
It's not closed above the resistance at 10.38.
All right, so that is for going high, going long, isn't it?
Yeah.
All right.
I mean,
So what else?
crack and snapback.
Crack and snap. Okay, what else? Anyone? Just a hint that this is coming from yearly. Yeah, this is coming from yearly resistance. And as per her, see, her bar on 28th of February on dollar index had touched this resistance. That much hint I can give it to you.
Yeah, Partha, if there's a 200 EMA on a daily chart in there, it's a potential crack and snap back on the 200, which then goes into that yearly resistance.
Wow, fantastic, brilliant. No wonder most of the trades what Ben is running now is running in profit, because he has added one more, which is the only moving average we respect, because Paul Tudor Jones also respects this 200 moving average. If you read about Paul Tudor Jones, multi-billion-dollar hedge fund now, he was a trader like us. So what Vijayata is asking, Ben has clarified excellently, that if we can take advantage of this friend 200 moving average along with our lines of yearly resistance, we can see there is a probability that rule of 4 can happen or a crack and snapback can happen. Let's see. So what should happen for the rule of 4 as per NP financials? Anyone? Ben has already answered, so I'd request other than Ben who can answer this question. Exactly similar to our previous discussion, which we did for the euro dollar. Now we are in dollar index, which is a basket of 6 currency pairs. I'm waiting for your answer. When you start talking, I'll stop. And those 6 currency pairs are euro, sterling, yen, Canadian dollar, Swedish krona, and Swiss franc. Sorry, Sweden krona and Swiss franc. Yeah. What are you thinking? That's not much of thinking.
We can clearly see it is touching to the resistance.
Yeah. Yeah, absolutely. Yeah, as Girij as says, is absolutely touching the. So for rule of 4 says it has to touch close below. Both of the things happened, and then low taken out. Yeah, that was Tyron was talking about. And then what did it do? It did took the low out by 20. Is it 20 points? Let's see. What is the low of this one?
Yes, it's 10.344.
10,344. Yeah.
Yes.
344 minus 20 is 324. What is the low of this one?
Yes, it's 10,329.
So it magic. It did not go below 20 points, isn't it?
Yes.
Because it has to go to 24. So when it goes 24, then possibly we'll be selling this market on a rule of 4. So now it is a perfect one. So what is the difference between this one and that one? Very slight difference. What is the difference between this one and this one? My preference is this one. Or you can have another preference like this one. Why?
Look, this bar, what you're talking about, like we are taking the preference. That's I always tell that if we are into the market by that time, someone can take the risk on that level, right?
Yeah,
and like if I'm going with this trade, I'm actually checking out all those rule of force first.
Yeah, absolutely. Fantastic. So the rule of force says that it has to touch the line, close below, bearish bar, low taken out. So the only
Yes.
difference between this and this is a bullish bar and this is a bearish bar. And as Ben suggested that there is a 200, which is a beast. 200 is a beast, yeah. Anyway, what we can say, so this fellow has closed below the 200 and these are yet to close below the 200. So to answer your question, Kraken snapback, yes, there is a high probability that the high of these 1, 2, 3, high of these three have cracked through the yearly resistance, or that is one way to look into the market. And the second way to look into the market, if you allow me to delete this Fibonacci so that the color is gone. So the another way, and if you allow me to take this out with Ben's permission for a moment. So another way to look into this market, plain and simple way, is it is a crack and snap back of the yearly resistance, because it took these many days. You can count through scale from this to this. It did 22 days, and 22 days first it did after 13 days. First I'll actually show you a magic of this 13. Anyway, 13 days, and then now 22 days. It did a crack on the rectangle. Listen to see my drawings carefully. I'm drawing this first rectangle here to the upside, and the second rectangle to here to the downside. So we can say, if we see rectangle, so this rectangle has cracked the resistance and this rectangle has snapped back. So did you understand my point, or should I go to a higher time frame to show you what I meant? Anyone having not understood my question, my points actually? Did you understand this crack and snap back, Vijayata, on the rectangle I drew?
Yes.
Yeah, because this portion of the market has closed above the support, and this portion of the market is now closing below the once the resistance like this one, once the resistance be actually broken, it can become a support, and the support when it's broken can be a resistance. So that is a polarity change. So this is a crack and snap back. And if we go back to the higher time frame, you can see that crack and snap back in a very easy way. Maybe let's go to the 2 weeks or 1 week even. We can see a crack on the yearly resistance there and a snapback. If I change the time frame, just let's see that. Wow, what a good one! This fellow cracked, close above. This fellow snap back. Oh my good one! This is a good one. Did I answer your question, Vijayata? Second question.
Yes.
Do you have any follow-up question, or anyone having any follow-up questions?
Yeah, I have one.
Otherwise, I'll go. Yeah, go.
Yeah, now I'm looking at a few. Like, looks like everything is at the top at the moment, like from indices to currencies. So, do you think that like everything will have like a big pullback in the future? Because everything I'm looking at is almost everything at all-time high. Lot of things, yeah.
That's a good one. I like it. That we on the basics of trading, we discussed one thing we need to remember, that in, I think so, module 1 unit 3, if I'm not quite wrong, or I think Trader Foundation. We have so many courses, Forex, commodity and bonds and indices, cryptocurrency. So now I'm in Forex Trader Foundation, and I'm showing you something which is related to what Dhanuka said, and I'll just show you why. I think it is in basic trading. So module 1 unit 3, last page, I think so. Yeah, that's it. Dhanuka. Interesting point. Very interesting point you have raised. Yeah. Many things happening, as I told you at the beginning of this class, that almost all the countries are going to election. United States, Russia, India, United Kingdom, in European countries, and of course small countries like Pakistan, Indonesia, and Bangladesh. or most of them are going to election. So now, on top of that, Donald Trump probably, I don't know, probably he may win this election as well, as in 2016. And when 2016, what happened to market, we can remember, we can see that a big thing is coming. And to support your point that yes, most of the things are at the top, like Dow Jones, like S&P, like Nasdaq, like Facebook, like Cochlear, many of them.
Yeah.
So, and to add to that, why? Because there is a surprising link between the unemployment and recession, which we discussed in basics of trading. In a module like basics of trading, we discussed this, because we always go against the herds mentality. Sorry for the language, but so what does it mean? It means that most of the people, 100%, 99, 90% people think that if the employment is at the top, that means unemployment is at the bottom, then the economy is doing good, and the economy continue to do well, and will continue to survive, or will continue to earn more. But exactly what happens is opposite to the common man's belief. Yeah, common man's belief is that, but this is the surprising link what I am showing you now. If the employment is so good, 97% of the people in paper in United States are employed. 94%, 95% people in Australia are employed. Of course, those who are seeking, we don't keep a record of those who have already dropped. They are not going to the exchange, employment exchange. So if that is the case, then 97% of the people are employed. That means economy has actually consumed all the employment, and it cannot consume anymore, so it cannot contribute anything more. That is why there is this is relationship, that whenever the unemployment is the lowest, there is a high probability that recession is coming. So in today also, we are having such a scenario which is repeating from 1975, that we are in such a scenario that employment is so high, unemployment is so low, we can expect a recession. To support your question, I'll just show you a couple of examples quickly. We'll go to S&P 500, which is in this IT finance real time is termed as SPTRD, and it is at the top, if you can see.
Yes.
See, if I go to a yearly chart, oh, it is at the top, isn't it? This is when Mr. Trump got elected, my favorite. Oh my God. This is when Mr. Trump got elected in November, and this is when we had COVID. Yep. So this contribution is from Mr. Trump. And then this was the COVID, which erased almost everything. And then after COVID, this is again the greed, which is continuing to go up and up and up. And we are having this type of highs for everything. Did I answer your question, Vijayata and Dhanuka?
Yeah, all
Yes,
good.
thank you.
Fantastic. And last question from Vijayata. How to identify the possible next week? Again, I love these questions because he's talking about present current situation. But it does not mean that you cannot ask questions on what happened to a global financial crisis or whatever .com bubble, DCB .com bubble, GFC, a global financial crisis, and all these acronyms you can actually see in our Discord. If you go to our Discord and join our Discord for free, you can actually see the acronyms for that. Otherwise, I'll go to the next question. How to identify the possible next week short-term trend for following currency pairs: Euro, Aussie, Sterling. Fantastic, brilliant. So we'll first go to Euro, Aussie. In the meantime, if you have any other question, please continue to ask through this chat or through email at the support@npfinancials.com.au. So we'll first go to Euro Aussie for looking into short-term trade. Girija is fantastic on this type of short-term trades. So we'll first go to Sterling and then go to Euro Aussie. So this is Sterling in front of us. And while we are seeing the Sterling, I wanted to show you the acronyms which is there in our Discord. This is our Discord, which you can join us. If you go to financials.com.au and then go to about us, a little bit about us, You'll scroll down and you will see that Discord is here. Yeah, ongoing support. The Discord is there. All right. So now I'll go to GBP USD. All right. Oh my God, too many lines. Not at all, because this is a yearly chart. All right. The yearly chart, this many lines is fine because we are selecting all the support and resistance. Yeah. All the swing highs and swing lows are support and resistance. Yeah. Below the line of support, above the line of resistance, and everything should be inferior time frames, so that we can see it in daily. So now we'll go to the daily. Before that, let us touch the quarterly as well, because there are many new people like Michelle is there. So this is the support resistance which is coming from the yearly, and we have drawn some 5 or 6 or 4 I think from the quarterly. Then we'll go to the this is just a bird's eye view. We don't trade yearly, quarterly, monthly, or that type of time frame. We go to the daily to see to answer what Vijayta is asking. Now in front of you, we are here, and I'll help you with 2 more things. Is the which is the monthly pivot, and of course the 200 moving average. I'd like to help you with these 2, and now I'll open this up to you to tell Vijayta, to help Vijayta to get near future bias. I would not say trade. I'll say, what is your bias? Is it short or long? If yes, why? If not, why? Okay. To the house. Anyone?
Sir, could you please make one trend line as well so it will be more clear?
Yeah, absolutely. So I'll make this trend line for the support, and I'll draw this trend line on the resistance from the this high is 26.99. This high is 26.97. So I can join this. Yeah. Any other line you want me to draw?
No, it's all good. Whenever like I'm going with the short trades, I always just check it out with this one.
Yeah, absolutely true. 100% correct. Anyone wants to add or subtract anything like this one maybe, or this one maybe? If you want, we can do that. It is up to you. But you have to answer Vijay's question. She's asking for short-term trade.
With the long bias.
Yeah, very good. Marty and Mysore.
We're
As we
above
can see, it is into the support, so there can be like crack and snap back onto this line, so it can be like long as well.
Yeah, absolutely. Marty, yeah, continue.
We're above the moving average.
Yeah.
We've gone below the monthly pivot, and we've closed above it. Possible crack and snap there.
Yeah. Very good. Extremely good. Anyone else would like to add anything? Otherwise, I would go with I'd go with Marty, what she said, and Girija, what she said. And we also have we can quickly draw some support lines because they are there. If it is not there, we will not force it. They are there. So it's a zone of support as of now in front of you. And of course, our indicators would come here. Apart from those indicators we are talking now, we are only talking on price, bar on bar. So I'll go with Marty and Girija, but I'd wait for this trend line to be broken and this pivot points of the previous month to be broken. So I'd like to do if I have to put a stop order, if I have to put a stop buy, then I'll buy at 26, maybe 27.10. 27.10. If I have to put a stop, I'll not go sell because there's too many supports here. Price is like water; it moves in this least resistance of support lines. In this case, we have 4 support, 1, 2, 3, 4, and only three resistances. So 4 support versus 3 resistances. So I would say we'll have a long bias, but we'll go from long from 27.10, clearing the whole number. That would be our bias, but we'll be again checking that with our strategy, which is discussed in our I think end of day is discussed in our beginners, 12 hour is discussed in advanced, and 4 hour in professionals. Did I answer your question, Vijayta, for the GBP USD?
Yes, thank you.
Then you go to Euro Aussie. If anyone want to add anything, please let us know. Otherwise, we'll go to Euro Aussie. And then I'll talk about certain critical market condition as Dhanuka has raised. And then, okay, for Euro Aussie, anyone wants to add anything? Marty and Girija has already said. So those of you who have not contributed, you can contribute, like Dhanuka, like Kim, Linda, or Michelle, or Nikhil, anyone.
It is just in a range, so most probably go
Yeah,
down and
absolutely.
hit the bottom range. Yeah.
That may be possible. That may be possible. So what Dhanuka is saying, if you have understood what he is saying, that it is in a range, I agree with that. If always better to get, always better to bounce from the bottom of the range to go up. That is the best possible trade. But unfortunately, it does not happen all the time. It happened only one time, and it did not dare to come to the 200 moving average. It did not dare to come to the 200 moving average, but it did a Kraken, but it did a turning point close to it. So this one is another opportunity there. Yeah, yes. So Dhanuka has added his 2 cents. So anyone long or short bias, what would be the short-term trend according to this question?
Yeah, Partha, I'd probably have a long bias if that price could close above probably around the 167.
This one here. Okay.
Yeah, yeah.
On the top of the this fellow.
Yeah.
Rectangle. Top of the rectangle, you mean?
Yep.
Okay. Ben is saying he would wait for the close above, close above, touch close above, high taken out. That's Ben. Anyone else? There is no opportunity to see price here anyway. Go. My eyes is telling me something. Yeah, go.
As we can see, it is already like looking like it's going short, right? So we have to check it out with the next bar when it is going like totally down from the pivot monthly,
Okay.
right? And then like wait for the Kraken snapback. I'm just going for the short ones, like, yeah. So for the like the long, like what we are looking for, when we are looking for the like fruitful results, yes, it will be the 166 when it is like, going all the way up. But right now, if someone wants to just go with the range, just again, always remember, just go with the 1% and just be on to the market on time. Otherwise, just don't go for those trades or anything.
If you have all
Because like oh my god, it is just stressing me out. So I'm just simply, if I'm like I'm practicing, I'm sitting all in front of that, then I'm doing it, otherwise not.
What Girija is trying to say in her own style, and you need to understand everyone's style. So if I have understood what Girija is trying to say, is she loves to go around this pivot, she loves to go. So what she's saying, if you are placing a market order, if you are placing a market order, not all. No, it is true that not all needs to speak in English. Like French people don't do that. Japanese don't do that. Chinese don't do that. German don't do that. Similarly, not all traders need to talk the trader's language like we do. Anyway, but we need to understand what the other trader is saying. So what she is saying that, so her favorite is to be in vicinity of the support line. In this case, pivot point. She will buy at this point, and then she is saying in front of the computer, that is her language, means you need to place a market order. That's what she loves. But anyway, you can put a buy. You can also put a buy limit buy. You can also put a limit buy. But somehow Girija doesn't like it. She prefers market order. But a limit order you can also place at this pivot point to go up. Anyone wants to add what my eyes is seeing? I don't know what you'd be knowing what my eye is seeing, but anyone?
So
Okay,
that when you are drawing that rectangle,
Yeah.
can't we include more candles rather than drawing at the top and the bottom? So,
Okay. So what if you now understand what Dhanuka's language is? Dhanuka is talking about this, right, Dhanuka?
yeah, to include more rather than going to the top and bottom.
Yeah.
Then you will see there's it's some up, crack and snap back at the top and bottom, something like that.
Yeah, very good, very good. Everyone is having his own style. Dhanuka is saying it should touch more. Even I think I have not drawn it properly as per Dhanuka. I think Dhanuka refers to more touches means this, right, Dhanuka?
Yeah.
See, I cannot see all of you, neither I can see your expression, but I can understand everyone's language because if people are so close to us. So according to Dhanuka, he prefers this rectangle because it has touched 4 times, 5 times, 7 times. Girija once tries to go 2 point, but you are going to. I think you are go.
Hello. So my bias is short on this Euro Aussie, sir.
Why?
If you could go and check at the 4 hourly range bar,
Mm-hmm.
right? And it has done a piercing, or I mean reverse of piercing.
Unfortunately, we need to answer her question on the day, this one, because we are discussing this one. We are, of course, we can go to the line chart, but as of now, we are not going there. So
Okay.
from this one, you will go long or short.
In that case, you have to consider the long term, which is monthly.
Yeah.
Monthly. So it is since how many days? It's since almost quite a long some time. It is at the resistance, quarterly resistance.
Yeah.
So that's the reason. And I will wait for the bar to close below the monthly pivot. Then it's a short.
All right. Now, let me thank you very much for that, Sri. Now, I'll add my 2 cents. Is what I was expecting is because this is about 200 and it has done again crack and snap back on the 200. If you see, this has cracked ball below and this has snapped above. So this is a crack and snap back on the 200. As we can see, it took a long time. If it is 200, generally above 200, we generally take it as a long bias. So probably what I was expecting from you, those of you who are practicing, this is a 3-bar reversal or rising 3 method, whichever English you talk, rising 3 method or 3-bar reversal as per NP Financials, 3-bar reversal. And this one, 1, 2, 3, 4, this is a 4-bar reversal or 4 rising 4 method. On the candlestick, if you can go back and check our candlesticks on this one, you'd have this as our favorite 4-bar reversals or rising 4 method, so because this close is not below this and this close is not below that. So if you go to our trader foundation, and do you remember, how many of you remember the candlestick 3-bar rising 3 methods and or 3-bar reversal? Anyone, did I say correct or wrong? Do you agree with me or not? So in this case, here in front of you is a 2-bar reversal or a rising 2 method. I would go long to say those to support or not support, to be with people who said we are long. Did I answer your question, Vijayta?
Yes, thank you.
All right. Any other question? Any other question before I can go and show some of the markets? And this is the rising 3 method I was talking to you. Module 3, Unit 1, Trader Foundation, page number 14. Rising 3 method. Those of you who want the revision, please go through. And then these 3 did not close below, and that's what boom. Makes sense? All right. So, anyone having any other question on the market, or as I said, this is 4 o'clock. I should give some time to Ben for 30 minutes and then Murti. But before that, I just wanted, I'll take more than 5 minutes to show the favorite markets, not favorite, the markets which are at an extremely critical point or which are extremely following our analysis as we did on the asset class evaluation and commodities. If I move fast, I have a tendency. If I move fast, please stop me. All right. Say, Partha, you're going like a rocket. Because so on the 29th, we said for gold, it took 13 days. It took 13 days in our asset class evaluations under commodities, because gold is a commodity. On 29th, we posted that gold, after it took 13 days to clear gold on this USA, United States CPI dated bar, because on that day, 13th of February, we had the CPI. If you go to Forex Factory, you'll see all the three, month on month, quarter, and yearly, all the three CPI came more than the expectation. That is why that news created this havoc for the gold. Yeah, and it gold took 13 days. I'll show in the chart. But what we are extremely proud of is whatever we write this for last 8 years in all the asset classes, for forex, commodity, shares, bonds, and indices, we actually happens in future 80% of the time. So what we said, that it took 13 days for this gold to close above this 2033, and we set our targets at 2048, 50, 65, 75, big targets for gold, and 88 on 29th. And what happened actually, after 2 days or 1 day, on first gold already hit our two targets of 48 and 50, and yesterday, that is last Friday, day before yesterday, it hit actually our fourth and fifth target of 75, 65, and 75, which I'll show you just now. Spot gold, it took 13 days. So it took 13 days for this spot gold to clear this resistance. Okay, that was a CCI generated bar. Because forex is a interest rate driven currency, interest rate driven derivative, interest rate driven derivatives. So I'll keep this one. Yeah, this is the source. And interest rate is derived from inflation, and inflation is derived from this consumer price index, or both are very related. So consumer price index, inflation, and interest rate are so well gelled. So it took this good news for the CPI of the United States, created havoc for the gold, but it did get a support on the monthly. That's the magic. And it did a crack and snapback and a turning point as per NP financials. And then what it did, it took 13 days to close above. Boom, boom, boom. If you see from this to this is 13 bars. So it took 13 days to close above. You may argue that this fell also closed, but the high was not taken out. So big bar high taken out is a low probability. Big bar closing above, touching, and high probability taking is a low probability. But small, medium sized bar closing above, touch, close above, and high taken out is a high probability. So that is why we actually wrote here. We did not select this one. We select this one. Hi, KB, haven't joined. Yeah, who's that? KB is, I think, Kedar. Yeah, Kedar, how are you? We are already 1 hour. Anyway, so that is what we selected, that this bar, not this bar, and said that on this pair, if this is going to go up, then this is our target. Yeah, these are our target. And what happened? What happened to that? Gold immediately reached our second target on 48 and 50, two targets. And on the last Friday, magic, boom, wow, unbelievable. So it reached our third target of 65, and then our fourth target of 55 and 75, and we have the last target as 88. Yeah, so out of the 5 targets, we already hit 4 targets. That is what I wanted to show you, that if gold is going up, as you can see, like we were not knowing that this is going, no one actually not knowing that this is coming on the right hand side. Anyone knew that? If he or she says yes, I would say no, possibly not. All right, so this is one market which is creating havoc, which is the gold market. And you see on that same day, around this date, which is 28th and 29th, in this fellow's counterpart, which is US dollar basket, did just the opposite, because they are oppositely correlated. Yeah, so oppositely correlated. So this fellow on 28th, this is the CP 13th. This is 13th. Where is the 13th? Yeah, this is the CPI bar. So this is the CPI bar. CPI consumer price index came down good, but this is a big bar. In our case, all buyers out. It got sold off. And on this one now, this fellow is playing with this, and there is a very high chance that this fellow will rule of 4 close below 200 bearish and low taken out. Is a possibility to this fellow go down. If this fellow is going down, dollar index, that means the US dollar is going down. If those rule of 4 happens, then Aussie dollar, euro dollar, sterling will go up, and yen, Girija's favorite yen would possibly come down. And what happened to yen is also in, if you see this one, 88.6 on the Fibonacci, it is playing for last so many days. I lost the count. So it is 15 days. 15 days, it is in a very tight range, and now possibly it will, if the rule of 4 is happening, because it has broken a trend line, it has not broken the second trend line, which are valid trend line. And we know the difference between invalid trend line, tentative trend line, and valid trend line. These two are valid trend lines because the high of the in-between swing high is taken out. Yeah, I know. Because this is the chance, this is our chance to add value in these 2 hours, so that you have food for thought for next at least 1 week, if not 1 month or so. Yeah, so that is our thought process on the 3 major instruments, which is the dollar index, gold, and yen. And then we'll go to touch one more, if when allows me, is the next one which I'll be going is the US 500, which is at the all-time high. Oh my god, this is crazy. All right, so this is all. Look at the distance from the 200. Look at the distance from the 200. If it goes too high from the 200, if it goes too high from the 200, like this fellow, there is a possibility there will be a reversal. Look at the distance from the 200. Anyway, okay, that is not the, that is one of the point, of course. But if I do the yearly chart, I probably hope Marty and Ben would be talking about this. This is again is a very, very, very high point. And of course, exactly as per our blog which we wrote on this S&P 500, we had our first target. This is written by Marty, Australia's economic tightrope, inflation, productivity, and policy tightrope. He's such a great fundamental analyzer. He analyzed fundamental from the different aspects. That is fantastic. And Donald Trump and world stock market. Past, present, and future. In that, what we said, for Dow Jones we had this target, and for S&P we had this 5,000 was the target. 5,000 was the target way back when we wrote, and then 5,136. So 5,000 is the first target, and 5,136 was the second target on the Donald Trump, which was on the January 22nd. And now what is happening is it has crossed the 5,000 and 5,130. It did. Unbelievable. It actually did. So we have long-term targets, and it has already reached 2 of them, which is the 5,000 and 5,136. Having said that, this is the top of the channel, and when we are at the top of the standard deviation channel, we can expect a little bit of correction, and this is showing us this is a possible crack and snap back. I may be wrong, but time will tell, and again we'll be there for the next week. And that is my conclusion on my part on those markets, on dollar index, on gold, on yen, on sterling, on euro Aussie. Thanks for asking those questions, Vijeta, and on S&P, which has reached our 2 targets of 5,000 and 5,136 according to our post on January 22nd. Do you have any questions so far? Otherwise, if you have 1 minute time, if you do not have any question, do not want me to continue, then possibly I'll actually request Ben to take us through his wonderful trades, while he's managing his risk, and how he has selected, why he has selected those. And over to Ben. Thank you, Ben.
Yeah, thanks, Partha. Yeah, so Partha wants me to go through some of these trades. I just thought I'd give you a quick background of me. I'm a refrigeration mechanic who made some really bad trades on crypto a few years ago, but somehow I seem to find a passion for trading and technical analysis. So that got me into MP Financial back in May of 22, and I have done the Forex courses, the share course, and in doing commodities now. Try to practice about 15 to 20 hours a week on the charts during the week after work, and also on weekends doing Sunday analysis. And yeah, have a lot of constraints with my trading, unfortunately. I work away from home 4 days a week, so I have very limited access to internet and very limited time working 12.5-hour days every day. So I'm looking at higher time frame structures now to do my analysis and do a lot of my trading on, and trying to find my styles, not my own style to fit my personality, but also style to fit my lifestyle, and found things like trend lines, Fibonacci, patterns, channels, divergence, love divergence, support and resistance, and candle structures as some of my strengths. So I'm honing in on those sort of areas to help my analysis. And yeah, and have made a lot of mistakes along the way. I'm just still demo trading, no live accounts as yet. I'm choosing to make all my mistakes in demo accounts. I think that's because I'm a very risk-averse person, and I've made some absolutely fantastic mistakes, and try to learn from every single one of them. Yeah, so some of those mistakes may be do you mind if I share my screen there, Partha?
Yeah, please.
Yeah.
I have stopped sharing.
Yep. Why won't it share my screen?
Yeah. The fifth icon, the up arrow within a box.
Here we go. Hopefully
Yeah,
it's coming through.
Screen is coming. Yeah, brilliant.
Okay. So yeah, some mistakes I've made along the way is lot sizing, not knowing how to use the platform correctly. So I'm using MT5 and with Go Markets as being the broker. So if anybody is having trouble with position sizing, I basically use a position size calculator, which is part of a what do they call that? An advisor. So this is the position size calculator that I use. If basically you can just choose whether you want to go long or short, whether you want a pending order, stop limit, or an instant order. So if you wanted to go long on a pending order, we're currently sitting at price at this point here. Let me just go to full screen on that. So we're sitting at a pending order right here at the moment. So you can adjust your entry to wherever you want, adjust your stop loss wherever you would like to sit that at. You can do it manually through entering in the figures here, or adjust the lines accordingly, and then adjust your position size to whatever you would like to have it at, whether it be, I'm more of a tendency at the moment to go in at 0.5% on any trade position. Unless I am extremely confident in the trade, then I may go to a full 1%. But being risk adverse, I am at 0.5% at the moment. So once you set your percentage size, you can find out what your risk is and how much you're risking at the end of the day, your margins, and then when you go to trading, the trade section, you can just hit trade, and the trade just goes straight through for you. Because I cannot use a computer on Mondays due to work constraints, I basically do my Sunday analysis, look at my position sizes, write it all down on paper, and then come Monday morning when the market's open, I'm using a mobile app to enter in all the positions. But some of the mistakes I've made is forgetting to change the position size when I enter the orders on the mobile app, and enter in some ridiculous size position sizes where 3 or 4 pips makes about $1,000 difference. So happened to me recently, and luckily I managed to just about break even on that. So if you are ever looking for the position size calculator, if you just type into Google search MT5 position size calculator, excuse my clumsy fingers, and we can go to that. And then I found it in Earn Forex, this one right here. And basically that will give you all the directions you need to know in order to get this onto your MT4 or MT5. So I hope that helps you in one way or in the future. So yeah, that is that. Moving on, I'll just move on to some of these trades. So my current portfolio, as you can probably see at the moment. So I've got all these trades sitting down here that are sitting in profit at the moment. I'm trading a lot less. I used to do too many pairs, but now I'm sort of whittling down my pairs a little bit. Best results I've had so far in my trading, and I'm finding less is more. So if we go through some of my understanding of the trades, and everybody's got their own way of doing things, but on Apple, basically I've got this on the monthly chart. I've got a very large channel that I'm sitting at here, keeping an eye on a potential double top up here, considering we are at all-time highs and around the 200 round number. And then going into a weekly chart, I'm also keeping an eye on the potential weekly head and shoulders, left shoulder, head, right shoulder here, and we have had a break of that neckline, and I've got a potential target sitting down at around 162 at the moment, which just so happens to line up with this trend line from a weekly as well. We've had a lot of intersections on that trend line, so hopefully it goes down there. And then on a daily time frame, I basically entered on this red arrow here, and got into the position. It came down. When it came back up, I didn't have the time to get out of the position at this point here, so I've been holding onto this position and keeping an eye on this 200 EMA on the daily. It seems to keep on knocking on the door of the 200 EMA. It's broken below, so I am staying in this short position until I see otherwise. Next one I do have, which is not a normal one for MP Financial, but something I've been keeping an eye on, is block or square. So what I saw on square is on the monthly time frame. So I noticed this channel quite a while ago, and just been keeping an eye on it. I really do love simple channels, and I love it when we can get to the top or the bottom of a channel. So when we whittle down into a weekly time frame, so sitting in that channel there at the moment, I was observing from this point around here where it was coming down. We had this big weekly bearish candle come in, and at that point, that's where I've marked out this Fibonacci. So we've come down on that Fibonacci to 38.2%, which got me thinking, when Fibonacci's quite often come down to 38.2 and have trouble breaking, it can be a continuation within the impulsive moves. So we've got an impulsive move and a corrective move. Now, if we whittle down to the daily time frame, so we had this 200 EMA that, once again, the beast was there. So it kept on trying to, came down to the 200 EMA, which I also noticed was obviously we're still sitting at the 38.2 Fibonacci, which we're also sitting at $65 and also sitting around a quarterly pivot point. So that was a fair amount of confluence for me to think that we may be going long. So I actually got into the long position on this bar here. We also had divergence, which is one of my favorites. We had divergence going back to this chart here. There was divergence all the way through. So particularly at this point here and this point there. So once at this point of the divergence, I entered on the position there, had my stop loss around this position here, entry came into there, managed to survive this candle. It's come back and it's kept on going up, luckily for me. So now I'm looking at this point here where I've moved my stop loss. I have taken profits along the way. As soon as I saw this large candle shoot straight up, I took partial profits, 1/3 of the trade off. And since then I have, since we have a monthly resistance here, we have a touch close below, and I've adjusted my stop loss to allow for the low to be taken out via the ESD, which for those of you who don't know, this ESD is entry stop distance for the share trading strategy. So that's where I'm sitting at on that one there. Does anybody have any questions at this point?
Fantastic start, Ben. You must ask questions to Ben because he has already touched two, Apple and Square. So those of you who are doing our share trading, you can ask any questions, or even if you are doing another asset class, you can ask questions, anything to Ben.
I have one question.
Yeah, shoot.
Yeah, only thing that you have a lot of things on the chart.
Yes.
How do you focus on the chart?
It's taken a lot of time. Believe it or not, I used to have more, and I'm tending to whittle it down a little bit more. So when I have this chart here, I may do some of my analysis on this chart where I do have a lot less on it, so I can get a basic point of view, and which is I'm just looking at trend lines, Bollinger Bands, and 200 EMA. And the 55 EMA. I don't use the 50, I use the 55 because I just like, it's a wonderful number, 55, I'll go with that.
Yeah.
So, yeah, so it's, I would say for me, it is just practice. Another example for me, whittling things down, pivot points, monthly pivot points have never really resonated with me. I found the clutter of the chart too much for my brain. So that's where I've gone to yearly pivot points and quarterly pivot points, which Path has showed me that has just come onto the platform recently. So yeah, it's just, all I can say is practice, 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 practice. And you know, I'm no expert, but I'm getting there. Yeah.
Yeah, cool.
Yeah. The more you look, the more you get used to it, I guess.
Yeah.
Yeah. If there's no other questions, I'll just quickly go through one of my favorites at the moment, Ethereum. Excuse me, just have a drink. So Ethereum on a monthly chart. So basically looking at this channel, we've had the breakout of this monthly channel. I have the normal monthly support and resistances marked up as well. And I'm also looking at the 618 Fibonacci level from the entirety of this move, which we're sitting at the moment. If we go down into a weekly chart, top-down analysis. So the other thing I've been looking at as well, and it sometimes plays out for me, is I've been looking at the channels and actually seem to maybe use them as a measured move. So I'm looking at that point there. It worked out for me a couple of times on the yen and also in gold, and I just use it as another point of confluence. The other thing I'm also looking at on this chart as well, if we go into Fibonacci, I'm looking at the 786 level as being another potential target for Ethereum to go up. And we had a nice slingshot resistance down here, which was a wonderful point to go long, which is not far off where I got into the trade initially. And going down into a daily chart. So we had, this is my entry point here on this green arrow. So we had a quarterly support, we had a quarterly past resistance, a monthly support. Also had the 50% area of the channel. If you could make that out, that point there, which I quite often find works not too bad. And we just had a break on a weekly trend line. We're above the weekly trend line and above the 200 EMA. So I decided to go long from this position here, and have just been holding onto that trade all the way through, taking some partial profits here and there. I took partial profits at this point here, only because we were sitting at a $3,000 round number, which was also sitting at a larger time frame area, the 786 Fibonacci, which is quite often a bounce point. So Fibonacci from that's high to that low on that last move, and just waiting to see if we can continue to go up and get past this last swing high. And I would love to see 4,000. We shall see. One other quick one, Meta, Facebook, I had a really good time with. Shares have really been doing quite well for me. Not much to write about on the monthly chart at this stage, but we are coming close to the top of a trend line I'm keeping an eye on. Now, if we go into the weekly chart, so I'm doing that measured move thing again with double channels to see if this actually does play out as well, which may come up close to around the 550 mark at this stage. Nice round number. I basically got into the trade when I started trading it. So I've got into the trade down at this arrow here. So we've just cracked above a monthly support, also a quarterly pivot point, as well as this green line here is actually the weekly 55 EMA, and we've got a nice weekly trend line at this point here as well, which we're still sitting above. So I entered the position there and basically have been riding it up, took some profits at this point here around the round number 400, which also did line up at a Fibonacci at that point as well. Just basically on that bar there, I was looking for a potential crack and snapback, so I took some partials just in case, and then took more partial profits on this major bar, which was from the earnings that came out from Facebook, which was very beneficial to me. And my position size is very small in this trade now, so I'm just holding the remainder of it to see where it goes. And I'm quite like the look of this last candle, which has gone outside of my channel that I had sort of sitting there at the moment. And it's just broken above the Bollinger Band as well. So hopefully those Bollinger Bands open up and the trade can continue on. If we go to one of my other favorites is Tesla. So Tesla, not much to write home on the monthly chart other than this monthly trend line that's that I've marked in, but we're nowhere near yet, but keeping an eye on. But the monthly 55 EMA, this green dotted line, we're sitting above that. So I'm keeping an eye on that. Now onto the weekly chart. So Fibonacci marked out here. So we came down beautifully to the 786 Fibonacci level, which is also very close to a monthly past resistance and the 55 EMA monthly support. The monthly 55 EMA, excuse me. So we had this big bar come down and touch it absolutely beautifully right there. So we've got a few points of confluence sitting right there. Also a weekly trend line that I've marked up there as well. So I basically bring that down to a daily time frame, and I entered the position on this candle here. That was my entry point. And then we're just sort of ridden up from there. I saw the divergence as well, marked as you can see on the chart here. Also, we had the round number, the 180, so potential crack and snapback of just on the 180. And then also something that I found on the share trading is this indicator, the ESD. So sometimes it works, sometimes it doesn't, but it can be a good telltale. When the ESD is in a negative, sometimes it can show a reversal point. There's usually something that transpires around price when the ESD is in a negative. I don't know why. I've just noticed it through all my back testing that for some reason a negative ESD can have a reaction. So that keeps me on watch. So we're still into this trade. As the trade developed, it was started out as a double bottom and now has turned into a head and shoulders, as you see from the left shoulder, head and the right shoulder. And we've broken above and have a target which happens to be perfectly on a yearly pivot point, which should hopefully coincide with the top of this channel that I have this sitting in. So I'm quite happy to sit on that one, but I am quite interested to see what will happen at this quarterly support here at the moment. Will it crack through it? We shall see. But I will probably lift up my stop loss to protect some of my position, probably to below this large candle here. So somewhere around probably around the 190 or 189.90 is probably where I would move my stop loss to in the meantime.
Ben, sorry, if you go to the chat section, Partha, Kim is asking you a question.
Oh,
Hi,
okay.
Ben. Yeah. So I just read it out. Hi, Ben. You mentioned closing out portion of your profits during a move. What's your reasoning for that? Instead of moving a trailing stop to lock in these profits and perhaps when appropriate, adding to your position. So it's on the chat section of the bottom right-hand corner. You can, if you can answer that question.
Yep, no problems. Well, say for example, with Meta, for example, the reason why I took profits on this one here is, I mean, if we look at all the candles going back in the past, and then we look at this big one that came out on a news event, I was definitely going to take some money off the table on this one here, because I wouldn't be surprised. I wouldn't have been surprised if it moved back quite heavily. There was quite a big pullback on it, so I wanted to take some of the position off while it is up here, just in case it did want to move back to somewhere around the 50% of this candle. There's still a lot of pips in that, so I would prefer to take 1/3 off there, and then potentially, and also then move the stop loss up. I do need to work on adding to my positions a little bit more. Sometimes I miss the move due to, as I've said before, my access to internet and just able to read the charts during the week sometimes is very limited. So if I miss the move, I miss the move. I won't chase unless I can get the entry price again. But yeah, adding to positions is something I will work on. At the moment, I'm just working on not losing and just maintaining profits. So I think it's managing your losses more than what it is to make any gains. If you can manage your risk, your gains can come in time to come anyway. So yeah, and there's probably a sense of nervousness as well about trying to get some profits in the bank while they are there. So yeah, I hope that sort of answers your question. Yep, I did. Fantastic. Okay, and one last one I will go through, which was the S&P, as we were talking about on Friday, Partha, and you've pretty much gone through the same thing, but I had those similar thoughts. So on the monthly chart, I had this channel that I've had marked up for quite a while, and we've just reached the top of that channel. So I actually put a position on the other day, and to go further into that analysis, I did put because we are going to all-time highs, the only other way I can think of looking for targets is Fibonacci extensions. So from this Fibonacci on this last corrective move, I've marked out the 161.8 and the 200, and we've come up to that 200, which just so happened to be at the top of the channel, and also $5,100. So if we go down to the daily chart, basically I saw this here, which was a nice hammer candle, inverted hammer candle, sitting at a 200 Fibonacci R1 yearly pivot point outside the Bollinger Band, and I was thinking that I was going to try and I did put a short trade on this, just looking for a quick move to the downside. I didn't want to put too much of a position on because it is against the trend, but because of this reasonably large bar here, I was looking to reach that as my target, which is the 50% of the bar, which is also the 38.2% of this last swing high, major swing high and swing low, which lined up absolutely perfectly. And unfortunately, price just did not get to that point. And unfortunately, I was stopped out with a very short stop loss just above the top of the channel there, but a very small position size because it was against the trend. And yeah, it's that one didn't work out, but I thought it was worth a shot. Where it goes from here, who knows?
One more question from Ben from
Mhm.
Vijayta. Vijayta is saying, "Hi Ben, can you please show an example of using divergence to take trade?"
Okay. Okay. Well, at this point here, let's just whittle down into this one a little bit. One thing I did like about this trade, if we're going to a weekly chart, at this point here, it's probably not quite correct, but with the divergence in the chart, so we had some divergence sitting on this here. So at this point, we're looking at the white line is at 49.38, and at this point here, we're looking at 46.91. We didn't quite make a swing high in this area here, but it was keeping me interested to know that this was actually coming down while this price is going up. So that's the divergence I was keeping my eye on there. If we go down to a daily chart, I'll stick with the candlesticks. So I was looking at this divergence here, that line there. So that's where I took the trade. And if we look at the divergence on the line again, we're looking at from this point to this point here. So we're in the oversold section above the red line at 43.41, and we've come down on the next swing high on the chart to 35. So this is coming down while the swing highs on the chart are coming up. So if it was to trade divergence correctly, I would wait for the low of this candle to be taken out and close below, and then enter with the ESD in mind. So at this bar here, I should have probably be entering at a ESD showing 39, and entry point should have been roughly around that point there. So that's technically speaking the way it should have done per strategy, but I was just going for a very, very quick move down and only just missed out. Does that give you an idea of divergence there, Vegeta?
She
Yep,
says,
so-
"Thanks for clarifying."
And one thing I did want to show, because Vegeta didn't quite get, sorry if I'm hogging the time here, Marty. I think it was last session, Vegeta was asking me my thoughts on EuroCAD. And just to give you an idea what I was looking at there. So basically I was looking, this is the weekly chart here. So I've got a 55 and a 200 EMA. And also a 61.8 Fibonacci, and also a 145 round number sitting on the bottom here at this point. So this got me highly interested on the weekly chart. And then if we go down into the daily chart, basically I took an entry at this point here, and I don't know why my stop loss was so shallow. Could have been one of those mistakes that I made, but yeah, I was looking for that reaction off the 200 EMA, and we also had a negative ESD around that point there too, which is got nothing to do with the FX Forex trading strategy, but something I keep an eye on. So we had divergence, we had all those confluence factors of round numbers and the weekly EMAs, and thought this was a wonderful point to enter. But unfortunately, I missed this move. It did go from double bottom to head and shoulders, and then has punched through quite nicely. So if that gave you some idea on what you were asking about a month ago, Vegeta, I hope that sort of helps.
Yes, thank you, Ben. Thank you,
And
Marty.
that's about all I have.
Fantastic.
Unless
That's
there's
brilliant.
some other questions. Yeah, and yeah, that's about it. Without your help, Partha, and Marty and Kerry, I couldn't be this far through. So thank you very much for all your assistance.
Fantastic, Bren. You did a fantastic job. Why we requested Ben to give us a talk through with his trades, recent trades, because we have seen Ben going as a trader, growing as a trader for last 2 years, and the practice task and the effort and the hard work which he has done. We like the divergence part of Ben so much that we actually included in our modules and units for the trader beginners course. So yeah, that was the effort, whatever it takes. Ben did that, and like Ben, we have two more speakers lined up. One is Gautam, who is trading $250,000 account, and another one is Dilkushan, who is doing a $500,000 trading account. And from day one, he is up 20%. He took 10% for passing the audition, and after getting the live account or the actual account, now he is up 10% on the $500,000 account, which is 50,000. So we'll also have placed a request to them to talk us through their trades and their style and their thinking way. And thank you, Ben, very much. Thank you. Thanks a ton. Linda says, thank you, Ben. And that was brilliant. So sorry, Marty, we got late, but if you can take us through the rest of the time. Thank you, Marty.
Hello all, how are we today?
Good, good, good.
And thanks, Ben. Thanks for your brilliant presentation. I hope we all learned something from that. So as per Partha's request to see a point of view on some markets that we are both looking at and we both have similar ideas on. Okay, so here's my screen sharing at the moment. Can you see it?
Yes, we can.
Oh, we can? Okay. So Partha and I were looking at gold. So I do those bi-weekly trade of the week videos. I believe it was at, where were we? In the middle of February. So around, it was this bar here. Okay, so if you notice on Partha's chart as well, he also had ticks and a thumbs up at this point in time. So we have different analysis, but we both came to the same conclusion that around this time, this is going to be some sort of a pivot point for our market to go up for gold. So at that point in time, when I put the videos out, I said this could either be a 1 and a 2 or an A and a B, meaning that no matter which way we look at this market, it was very likely that it was going to go up. Okay, and I think Partha may have gone long on this position here due to a quarterly support line, correct me if I'm wrong, and a crack and snap on that.
Yep.
Okay. So we had that there. If it's true that this is a minor impulsive wave up, we will do our 5 above this fellow here. Okay, so our 1, our 2, our 3, our 4, and eventually 5 up here. All right, so that's that fellow there, which is gold, we both agreed on. So the S&P isn't something I was watching, but I was watching the NASDAQ. Okay, so I don't have the standard deviation channel, but I have an Elliott wave channel here. And if we remember many moons ago, I highlighted the fact of touching the channel 1, 2, 3, 4 times before we could possibly see a correction. Okay, so we've got the 4th touch here. Now this Fibonacci here is just a measurement. So that tells me that this 5th wave in black is the same length as this 3rd wave in black. So this can be somewhat of an indication that this wave can be nearing its end. Okay, so if it is, it's only this green wave, so 1, 2, and 3. So I agree with Partha. Eventually in these American markets, well, pretty soon we will see some sort of correction. It won't be a big one just yet, I don't believe. Okay, so we'll see a little correction. And we will see this shoot up again. Okay. So why I say that is because, as Partha also mentioned before, Tuesday the 5th, the United States elections. Okay. So until this time happens, we'll get a little correction along the way. And when this happens, we might get some kind of big policy change. Okay, for the amount of money they're allowed to print or how much they're allowed to lend out. Something big that's different, and that will complete these blue numbers here. Okay, and then that's when we will get our much bigger correction. So it's likely this is just a small wave up. Okay, and it's going to have a bit of a blast off top, a big melt up, they call it. Okay, until we get a big policy change. And with these markets, okay, so these equities markets, if you can see, it comes back to 2016 here. If I get this other guy up, my pro real time. And we go back in time. We can see that it's better to be optimistic about these markets than pessimistic. Okay, so I'm happy to hold on a long bias to withstand a couple of short corrections until, I know, we might even get to this yearly resistance level up here, 18,970. Okay, so that's my sort of take on the equities markets and gold. For the dollar, that's pretty tricky at the moment. So the dollar index. I've got an A and a B. So this can potentially be our minor wave down to be completing our C wave down. So we got here, if I enlarge this chart a bit, we can see that there's a small candle with tails. We got tails here, here, here. We got inverse hammers. We got hammers. We got no real movement. So it's a lot of indecision here. And this is helping us understand that this is just a correction within a much larger correction. Okay, so it's pretty tricky to read this one. Although a part of the dollar basket which makes this fellow up is the Swiss. This is another one on our video. So on our daily time frame, we're looking for our fifth in red, our red 5 down. So we got 1, 2, 3, 4. We're in somewhat of a Fibonacci zone here. Well, I would likely believe this ABC to complete our 4 is finished, where we can start looking for our red 5 to come down. So that can help with my view to selling US dollars there, as well as the Aussie dollar. On my weekly time frame, I posted this a while ago about this large A, B, and C pattern down. Our 1, 2, and it's hard to say now, but I'm hoping this is our green 3 to come up around here, which will also be a inverse head and shoulders. So our shoulder here, our head here, and our other shoulder here. So that's another reason why I'm shorting US dollars. They're hard to say at the moment. So that's a couple of markets there with my view on US dollars, the equities markets. We also had gold. Okay, so oil, one last one. Okay, so again, on a daily time frame, 1, 2, 3. Just waiting for this 4 to complete here. If I look on the pro real time for another perspective, one, 2, 3, 4, and see our angle is not very strong. I have a lot of confidence that this fellow is going to come down again, so below this 200 moving average. So this could be a good time to try and look for your crack and snap on your yearly pivot point here and your 200 moving average. All right, has anyone got any questions or want to look at anything in particular?
What do you think of Bitcoin, Marty? It's on an absolute tear at the moment.
On Bitcoin, I think I was very wrong on Bitcoin. Where is Bitcoin? We haven't taken this high out yet. If we take this high out, this will be an impulsive wave up and not a corrective wave. It's looking very much like an impulsive wave. All this. but it contradicts my point of view when I look at Ethereum. To me, it's still hard to believe that this is an impulsive wave just yet.
Yeah, gotcha. Thanks, mate.
We have the Hang Seng. Okay, so everyone's probably heard about Evergrande and the big property collapse over there. The Hang Seng here. So it is quite likely the C wave has been complete down here. We have started another wave from down here to go up. What else can we look at? The Euro Aussie we looked at earlier. So a daily time frame, I had this to be an A, a B, and a C. Okay, so I can probably put a 1 over here where we'll get a small correction, but I'm pretty happy to stay with the long bias on the Euro Aussie, the same as what we came up with before with our group discussion there. Add Garage's dollar against the yen. So this is 1 and 2, 3. Our 4 can potentially still be in motion.
Marty, do you think it will go to the 151? I made that line when it reached up to that.
Sorry, you want a line on 151, did you say?
Yes, so it was like the line there. Now it is 155, I think, sorry, 150, 80, 88, something going on. So do you think it's going to the 151, then it will come down, or it is just, what do you think about that?
I think 1, 2, 3, 4, 5. One, 2, so 3. I would say would be going below this 1 here.
Okay.
Okay, Partha. Anything you'd like to mention, Partha, or talk about?
That was brilliant understanding, Marty, for the for the markets which we actually look for, the dollar index, S&P, and Hang Seng and others. That was fantastic. Any questions to Marty? If not, then I'll possibly quickly share my screen, Marty, if you don't mind.
Yeah, absolutely. Stop sharing.
Yeah, thank you for that. I share my screen, and all the things which Marty showed can be found here. Vijay says many thanks, Marty, for sharing analysis. He's preparing exceptional videos for us every week, 2 of them in the Discord. So this is our NP Financial Discord live trading room, in which you have Elliott Wave Discord. You can subscribe to this, and then what you will get exceptional analysis, not only for the previous week what we said, that's it, that is the power of NP Financial, because we say that this is going to happen, and then we come back and analyze what we said, that did it happen or did it not happen. So Muddy is doing this for long now. The current one is this one. So he was talking about this one. So trade of the week from the last week perspective, and these are the two videos which I am mentioning every week. It is coming at this channel, Elliott Web Discord, under NP Financial Live Trading Discord. So one for the future week. This is for the future week, what is going to come. And once we said, and the next week we come back and we prepare a review. So those of you who are interested can subscribe to this Elliott Web Discord, number 1 or 2, and number 1 can be, if you go to our training, you are probably already know, we have a tremendous course on the mapping of markets, which comes under Forex. So Forex and then mapping of markets. And then in that mapping of markets, we do the Elliott wave analysis as a fantastic way to the market analysis from a long term perspective. And we do put some of the videos, not the live ones, but some of the videos there. So if you're interested in the Elliott wave analysis, you can do that. And those of you who are, thank you so very much for all of you who are actually spreading the word of mouth, that whatever we are doing. So we have introduced a thing called survey. So if you can introduce your friends and to this 30-minute session, free session, of course. The first one is the free session, just by giving your just by giving your phone number, for example, 0397906476. That's our number, and it will ask you 2 questions. What are you looking for? Is it trader development or trade ideas or psychology by Kerry Brown? And what is your skill set? Is it beginners or intermediate or advanced? And then I'm not a robot. Then it will take us through. It will take you through your friend or your anyone relative or any known person who is interested to join NP Financial's way of thinking. And you saw how Ben so does his analysis of Marty is showing us every week, and how what we are analyzing and what we are, our strategy is telling, is coming true week after week, very high percentage of the time. So we really appreciate your support. And for this, if you do not have any questions, we all of us from next week probably we ask Gautam to speak from his $250,000 account, and next to next week probably we'll ask San to speak on his 10% on the, actually 20%, 10 on the audition and 10 after that. So on the 500,000 account, of course they need to be agree, and they will be, because people enjoy sharing their knowledge, and knowledge sharing is one of the noble things which we can do. And I hope Kerry is getting better from the COVID. And if you do not have any questions to any of us, including Kerry, Ben, Marty, and me, or any other, I thank you so very much for your time, and so we can like Sunday, and then I wish you all the best and happy trading. Thank you very much.
Thanks, guys. Talk soon.
Thanks. Bye.
Thank you, guys.
Linda says thanks all. Sri says thank you very much.